All right, good afternoon. Welcome back to our Finance, Audit, and Budget Committee, chaired by myself, Commissioner Ted Terry, joined by committee members Commissioner Michelle Long-Spears and Commissioner Shakira Johnson. We have our agenda before us today, have a couple updates and a couple agenda items. So we'll just start off first with our meeting minutes from March 10th. This is item 0569. If there's no edits or changes, I'll open the floor for a motion.
Motion to approve.
Second.
Motion second. Seeing no further discussion, all in favor, raise your hand, say aye.
Aye.
Chair votes aye, motion carries. All right, let's jump down first to the discussion item, which is the operational assessment. And it says Malden and Jenkins, but is that, it's meant to be the Momentum firm, right?
Yes, the Momentum firm led
Okay.
by the CEO of the Momentum firm, Lakeisha Cisse, will do the presentation.
Okay.
The reason it says Malden and Jenkins, it really, what her role is taking the report that was done by Malden and Jenkins.
That's right, yes,
And
thank
working
you.
with us to implement it.
Okay, great. All right, presentation is being passed out now, and Ms. Cisse, come on up. Welcome back.
Okay, perfect.
Hey.
Hello. All ready?
Hello.
You let me know when to begin. Hi. Good to see you all. Good afternoon. Hopefully you have the printout of the report today. Good to see you again. Lakeisha Cisse, Managing Principal of the Momentum Firm. And as COO Zach Williams mentioned, last September we awarded the contract to help implement the Malden and Jenkins operational assessment, which laid out over 250 operational improvement activities across 19 departments, and we've been sort of shepherding that process along with departments to realize progress as early as possible. And we promised at the beginning of this process to engage the board early and consistently, and this is one of our quarterly updates to each one of the committees that have departments who were assessed aligned to them. All right. Today I will, this has been a pretty consistent format with the other committees that we've presented to this month. We'll be back in June for the next quarterly update, and we will have enhanced some of the items that we are reporting on. So we're taking note of the different questions that are coming up in each committee, and we'll be refining this report and process for more detail in the future. And of course, more progress to share in the next time you see me, hopefully. So we'll talk a little bit about the operational goals that our process has defined, in which we're looking to realize results in. I'll talk about our implementation management process, how that's going, and I'll provide an update on the implementation status of recommendations that departments are overseeing. The departments that are included or up for discussion for the FAB committee are Finance, the Office of the OMB, the Office of Management and Budget, and Purchasing and Contracting. Okay. So just a refresher that following the Malden and Jenkins assessment, over 500 pages, like I said, over 260 recommendations, we laid out some change drivers or goals rather that the implementation of this assessment is aiming to achieve. And we are realizing many results in these areas. Some noteworthy things on this slide is through this process, we are attempting to do things like reduce year-over-year internal audit findings, improve customer satisfaction, identify and achieve cost savings opportunities where reasonable, automate processes and better integrate our technology across the county, and enhance our data-driven governance capabilities with a goal being over 100% of departments reporting KPIs this year. You know, this slide just represents the process that we're taking to support departments with planning or sequencing rather progress. We're taking things into consideration like the type of goals or impact we're attempting to have, as well as the level of effort required. And our focus for this assessment, or implementing this assessment rather, is in the top quadrant. So we're looking at the quick wins as defined in the Malden and Jenkins assessment as high impact opportunities that have, require low effort to implement, and major projects, very impactful things, but are heavier lifts to get across the finish line. Nonetheless, we don't want to lose sight of those because of their impact potential. It's in the major project area that we anticipate some departments may require additional support. And we're tracking the types of support that's required in helping overcome those obstacles throughout this process as well. This slide lays out our implementation management process, and I'll just bring your attention to what we're actually tracking or monitoring, and it's the implementation monitoring table. It's these areas that I said we can continue to enhance as we come back and report. But so far, we're looking at the recommendation status, the projected timeline and rate of progress, the type of additional support needed as reported by departments. We're looking at the reasons behind why some recommendations are currently being reported as blocked or rejected. And in the future, we're going to be able to quantify some of these cost savings, as well as align the number of recommendations met by challenge area, so we can start to see where and how we're making impact and progress. This dashboard represents all 18 departments that were assessed, so you'll see that the 266 recommendations for the assessment there across the board. Currently, there are 59 recommendations that are being reported as met, 11 blocked across the entire organization, and over 123 recommendations requiring some sort of additional resource. So the reason why that number is higher than what's blocked is because there are some recommendations that were reported as in progress, but they still require additional support of some sort in order to complete or meet the recommendation fully. That was across the board, so that dashboard view is displaying the consolidated insights across all 18 departments. And now I'll go specifically into detail for finance, O&B, and purchasing. Okay. So for these three departments, there are a total of 39 recommendations identified in the report. Currently, 5 are being reported as met. 1 recommendation is blocked, and there are 30 recommendations that are being reported as requiring some sort of additional resource in order to be able to complete it. Okay. We'll look at the common challenge areas that were identified in the report. As they emerged across these 3 departments, there are governance issues, org structure challenges, and technology limitations, very consistent with the top 3 categories across the board. One enhancement we've made to the reports this week is in the appendix. Towards the back, we've now included a glossary of definitions. So hopefully that clears up a few things when we're describing what we mean by a governance issue, org structure challenge, et cetera. Okay. Looking ahead, so as I mentioned, we did ask, on an ongoing basis, we're asking departments to share their projected completion date for some of these recommendations. And one of the things that we are noticing, as you can see from this graph, is that most of the projected completion dates are deferred to the 2027 and beyond timeframe. In April, we are re-engaging departments individually again to get more qualitative insight and understanding on why some of these initiatives have been projected as deferred to 2027 and beyond. And it's going to be our job at the Momentum Firm to try to accelerate progress and hopefully find a way to move some activity up so that we can realize some of those quick wins. So challenging our team to work with departments over the next couple of months. So when we come back and report in June, we would hopefully like to see more activity sort of, up in the summer to fall timeframe of this year, kind of moving up beyond that 2027 timeframe that's currently projected. All right, so I mentioned there are different types of support that we're tracking that are required, and we're just trying to get a breakdown and understanding of that. And so for the 3 departments in the FAB committee, cross-departmental support, third-party assistance, slash assessments, and additional funding were the, three major categories here. We started to report on this following a report we did back in December, where we were asked by a commissioner to provide additional detail on support that departments are requiring or believe is necessary beyond funding. And uniquely, we find it's interesting that cross-departmental support has been coming up very frequently as a resource requirement need, and that's something that we are working with the COO and other leaders to address internally and sort of redesign some operations to facilitate enhanced cross-departmental support. It's kind of an interesting insight beyond a funding limitation. Right, and just some call-outs from what was reported to us by these three departments over the last month, and some interesting insights. So I mentioned this, but most recommendations. Oh, actually, no, I did not mention this. Let me clarify that. Separate point, most recommendations targeted for 2026 are owned by the Purchasing and Contracting Department, and they fall in the inadequate data tracking challenge area. So, this is an example of an area that we're able to kind of lean in more closely. It's not a unique challenge to purchasing by any stretch of the imagination. Nonetheless, most of the recommendations that are targeted to be completed this year have been reported by purchasing as falling in that category. So that's great, because if you saw the graph, a lot of activity was projected to 2027 and beyond. So there is some, anticipation of progress this year, and a lot of that was reported out of purchasing. So I wanted to call that out. Finances recommendations are weighted much more heavily currently towards the longer term, with over 80% of finances recommendations targeted for 2027 and beyond. This is something that, again, we can, through this process, get more information on, dig a little bit deeper into next month, and try to understand if there are any opportunities for us to accelerate progress or help this department overcome some of those blockers. Second point is that of the 14 recommendations that require additional funding, over 13 do not yet have a defined cost estimate. So this was a finding that emerged in a few other committees as well. So we're positioning ourselves again through this process to support departments where feasible to better articulate some of these cost estimates for the purpose of implementation, right? Because if they understand that they're going to need third-party assistance, but they're not clear on what the requirements are, or exactly how much it costs, this obviously will impede progress and, timeline. So we're going to work with them to get a better understanding of that. You all may recall from the dashboard, there was just one recommendation that was blocked, reported in this committee, and that comes from finance. It was noted that it required both additional funding and staffing, and it's actually been reported this month as being approved in the FY26 budget. So hopefully we shouldn't have any blocked. Hopefully the next in the next quarterly report. So that's progress made. And then the last point is that, just several recommendations aligned to this committee are still in the early planning stages with key details not yet defined. So that, I believe, connects to point number 2, where we have most of the recommendations that are, being reported as requiring additional funding, not yet having a cost estimate. And so, again, we think this process is helpful, and we are going to, in the next month, like I said, work closely with these departments again and try to get a better understanding of how we can help overcome some of these hurdles and accelerate progress and quick win implementation. Right. I will end on sort of across the board where we are, what it means, and what comes next. And I've kind of alluded to this already, but there are 3 areas primarily that across the 19 departments have consistently come up as challenges from their org structure issues, governance issues, and technology limitations. And what we're doing over the next week is working with the COO's office and defining an implementation roadmap. So what we're doing is aligning what we're calling anchor initiatives. Some of these initiatives that impact more than one department, we're going to align them to a roadmap and get a better understanding of how we sequence some of this progress. And governance issues, org structure challenges, and technology limitations are certainly 3 of the areas that are at the top of the list for addressing across the organization. And as I mentioned, we hope to improve the reporting process as time goes on, ask additional questions to departments as they're self-reporting this progress. I'll pause to see if there are any questions. Thank you.
Thank you, Ms. Issei. Questions from commissioners or comments? Commissioner Long-Spears.
Thank you very much, Mr. Chair, and we appreciate your thorough assessment and being present with us today. I do have a couple questions for you. The first relates to the projected implementation timeline, with the vast majority of them being pushed to 2027 plus. And you had mentioned that you are going to kind of try to drill down on that a little bit more. Does that give you any pause, though, that everything has been pushed out so far? Any concerns you would want to share with us?
I wouldn't necessarily say concerns, and without looking at specific instances of data, I think I would be a little reluctant to call out something from memory. But I would say it, visually, not necessarily concerning. What I would say is that there's a lot of work in progress, and perhaps this timeline doesn't really show that. There's a lot of activity happening now. This is about completion date, right? And so I think working more closely with departments to try to get creative about ways in which we can accelerate the closing out of some of these recommendations is going to be what we do our best with over the next month or so. But there could be a variety of reasons why a department is anticipating that the completion of a recommendation is deferred. Without calling it a specific concern, I think it's an area of opportunity for us to explore how to kind of accelerate impact.
Fantastic, thank you. So I just observed, if I'm reading this right, that there are 12 projects anticipated completion by December, and then 21 is 27 plus. So that would be, or 2027 plus, as well as the unsure and blank.
Yes, we're actually going to, yes, that is correct in the way you're interpreting the sort of the XY axis here. And what we'll do as a revision of this for the next cycle is we're actually, the next time we ask departments to report projected timeline, we're going to break it out into quarters and get very specific. We're going to look at, start tracking and monitoring performance progress on a quarterly basis. So 2027 could be the first half of 2027, right? Or it could be the second half. So we'll try to get a little more specific and even go into the year 2028. And see where they land, if anything is going beyond 27.
Okay, fantastic, thank you. My next question is slide 14, summary insights for the FAB committee, point number 3. You talked about the one blocked recommendation, and the item is calling for the creation of business analyst type positions. And I was delighted to see help resolve some of CV 360 issues, because I believe that's been a challenge for my office, and I understand other departments and district offices as well. Are we looking for 2 positions, 3 positions, or is all of that TBD?
CO Williams, did you?
If it's to be determined, I understand. I just know that some of the CV 360 problems have been incredibly challenging, and I'm glad to see that it appears that has been recognized.
Yes. Yes.
Number 3.
So the question specifically is, are we going to add funding and staffing?
Well, it states here on point 3 that the blocked item calls for creating business analyst type positions to help resolve CV 360, support finance users, and serve as liaison with DOIT.
Right.
I'm just trying to get an idea. That sounds like an awful lot of work.
Right.
I would
So-
hope there'd be more than maybe 2 or 3 positions,
Right,
but really
And so- and I-
focused
I
on
think-
CV
so-
360.
Right, so where we are now.
Yeah.
With all of this, and Ms. Cisse and I have had this conversation where we will be coming into the conversations with the departments to see, kind of our assessment on their responses thus far. In some instances, we may agree 100%. In some instances, that may mean an addition of positions or new funding. But in some instances, it may be reclassifying vacant positions. It may be changing how we do things, our practices and such. So I think we're at the stage now where Ms. Cisse and her team have gathered the information, departments have provided initial responses, and together we're going to work to see what is our best path forward. So I could not, as I stand here today, say, yes, we're going to increase staffing or something like that.
And when in the timeline are we hoping this item will be addressed? This year, 2027 plus?
Oh, absolutely. Well, we will have a path forward probably after our next meeting.
For that one blocked item?
Mm-hmm.
Okay, great, thank you. Yield back.
All right, thank you. Commissioner Johnson?
Yes, thank you. And thank you again for the amazing presentation, as always. I brought this item up, or comment up, during the presentation with PWI, and it's the idea that we consider these items that are blocked due to funding as we're doing our mid-year budget and 2027 budget. So if we can work, I know you're meeting with the departments in April, if we can push them to get some more clarification and to quantify those funding needs, that would help us make sure that we're making these considerations for the funding requirements as we're working on our mid-year or 2027 budget. And then, Mr. Chair, I don't know if we consider, since it is funding and we're FAB, do we look at all the funding requirements across the board? Do we have each committee consider their funding requirements and then bring us recommend? I'll leave that to your discretion as the chair, but I think that would be impactful as our part of this process to make sure we're listening and trying to put these funding items in our budget consideration. That's all. I yield. Thank you.
Okay, great. Thank you, commissioners. Thank you, Ms. Cisse, for the update. And I know this is, like you said, it's a work in progress, and you hope to have progress in stages. And it does take a long time to do this because it is very comprehensive. A couple things that I'd like us to maybe hone in on over the next few months to see if we can make some progress from some that you recommended. Some that appear they might be stalled, and that's a little bit to your point, Commissioner Johnson, is just if there's some things on here that the committee members feel should be a priority, then let's start talking about it if funding is an issue, number one. But then recognizing that some of it is operational and is under the purview of the CEO, so we could just provide support or a sounding board for some of these things. So a couple that I'll just highlight here, OMB R200. So this is actually what we have been talking about moving up the completion of the budget process by November 1st. And we know that's a charter change, and I'm still wondering out loud for the law department about, what if there are things that we can change via home rule that would help us with these processes, moving forward with some of those changes versus waiting for the perfect document to all come together to do as one referendum, because it appears we might not make the deadline to call a referendum for an organizational act change. So I would love it if on some of these items, and I don't know if the budget is one of them, to me it seems like changing a date of when a budget is required wouldn't be a referendum change. And so it appears that everyone we've talked to up here seems to think that makes sense. So if we can move forward with that, I would say let's prioritize it. But maybe Attorney Welch, if we could just get a some guidance from the law department about whether changing the budget date is a referendum. Okay, next one was R201, which I think is really interesting because it actually might solve the other one that we were just talking about. So it says the county should explore methods to involve county commissioners in the operational budget development process at some point prior to the CEO's formal presentation of the recommended budget. So literally what we've been talking about. Potential methods of increasing county commissioner involvement in the operational budget development process include requesting that the BOC pass an official budget priority resolution at some point early in the budget development process, and they cite City of Atlanta as an example, or by inviting county commissioners to participate in one or more of the strategic budget planning sessions held near the start of the budgeting process. So again, this in of itself, commissioners, such as like having the constitutionals come in earlier, having each of the committees go through some budget themes and things that they would like to see in the CEO's budget and start those hearings and those meetings in the fall ahead of the budget process. So either one of those could be the solution, but I do like the fact that City of Atlanta and maybe other jurisdictions do this as well, where the legislative branch either is sort of side by side working in that strategic budget discussion and planning, or simply by active resolution, indicate here's where our priorities are, and that might help sort of ensure that what comes out of the CEO's budget December 15th is mostly aligned with what we were expecting, and that might actually speed up the adoption. So that's R201. Under purchasing and contracting, I do agree with Commissioner Long-Spears. I would like there to be some emphasis and priority put on CB 360. And it looked like there was a couple things within that, whether it's, having additional support staff to help with CB 360. It says implementation requires training. So that looks like it could be a cost or at least a third-party assessment. So if we're using CB 360 and that's our system, having everyone up to speed and trained on it and knowing how to use it makes sense to me. The one thing I was curious about, Zach, and this is PCT R238, the department should establish a separate contract maintenance division to reduce some of the workload of the 3 procurement teams and to create separation between the purchasing function and contract management function. And it says not feasible / rejected, but I think in your analysis, Ms. Cisse, you have pros and cons. And so I'm interested to dissect those pros and cons a little more detailed, because I'm picking up that there's aspects of having a team follow a contract and procurement from the very beginning to the very end, but then just wondering, like, this idea of a sort of a contract maintenance division just to kind of follow what's already been done and make it a little bit more flexible. And so I'm trying to understand, is
justification?
Is that a big change, or is that just something that we can, it sounds like it could be a small change, but it did say not feasible, rejected, so would love to, if we can, maybe not today, but between now and the next meeting, dive a little bit deeper into this one. And part of it is because I do think that sometimes, like for some of the commissioner items, it does seem like, we're having to kind of bird dog, kind of getting contracts that I think we approve at the Board of Commissioners, but I guess in essence they're our office contracts, but we have to engage with team A, B, and C,
Sure,
I guess.
Sure.
And just maybe, even at the very least, some, not saying special attention, but just making sure that the commissioners' contracts in that process has a way to kind of to be efficient and stay on it, so nothing kind of drags out for months where someone might not get paid while they're doing services for us.
And if I could,
Yes, please.
Mr. Chair, just real quickly, I want to mention or remind the committee that about, I want to say June timeframe, something like that, we brought on board NIGP, National Institute of Government Procurement, to do an assessment and so forth of the procurement department. I look forward to discussing that in FAB, wherein we will take into account recommendations like this and many others and kind of talk through what we feel is going to give us the optimum procurement system.
Okay, so what the work that the Momentum firm is doing will feed in
It's
information to that?
It's all designed to do the same thing,
Yeah,
which is
Okay,
build
good.
a strong department.
Okay, good. So there's going to be a little bit more honing in on those issues. Okay. And then the only other thing that I flagged that seemed like to me might be the easy wins, Ms. Cisse, is the R244. Purchasing contracting should work with DOI2 to develop a process to automatically email the end user department a form for vendor evaluation each quarter. The form should be auto-filled with the award number, contract vendor, period of performance, and scope. These should be maintained in a database for use in more comprehensively evaluating prior vendor contract performance. To me, that should be something that could be pretty easy. I mean, we have the full suite of Microsoft software. I know for a fact that they have forms and template. I mean, there's a sweet tool option for everything these days. So simply setting up I can't remember the IT definition of it, but it's sort of like it's like a decision tree that if it's just built into the system, yep, all the contracts under this department will just basically be sent that form automatically. So it really is just a reminder for them, hey, we've already basically fill in all the gaps. We just need you to actually, type out a couple of comments, right? How they're doing, things are going great, things aren't going so great. And then that way we can, as it says here, I think I guess it was Malden Jenkins that wrote this, know how our vendors are performing. I think that makes sense. So hopefully, this has not started, but it seems like that one should be pretty straightforward. But is there any
Did you reference the
R244, a PCT R244?
R244? Okay.
Yeah,
we'll
but
we'll check in on that.
I don't know if that's something. I don't know. I
Could
don't
be
know all the IT
potentially
back end
accelerated.
stuff, but I thought maybe that one to me made a lot of sense and could be automated. I know there's a ton of contracts, so obviously automating it would make a lot of sense. And I mean, if it's not every quarter, maybe it's at least twice a year. I don't know. I mean, Director Butler, our contracts, like how do y'all currently evaluate vendors in process during the contract period now? Is it like at the end of the contract? Is it like halfway? Just curious if you have any thoughts on that.
Sorry, Commissioner. So our preference is throughout the life of the contract, but that's difficult for the user departments to do. So at minimum, we've been asking for at least quarter or at the conclusion.
Okay. Either every quarter or at the conclusion?
Yes.
Okay.
We would love, as it's progressing, whether good or bad, we want to see all of that, but
Okay. Is there reticence that it just takes time to fill out paperwork? Basically?
I'm making assumptions, but I can see how if you're in the business of doing whatever it is that you're doing and, there's nothing that's an issue with the vendor, you don't really care to do an evaluation. But now when things become a problem, well, now you're going to do one because we have drilled into them. We can't really help you if we don't know that something's going on. So you need to
absolutely.
tell us.
And also, I think it's good, and I'm looking at Attorney Welch here and Attorney Phillips. Well, I can't see Attorney Phillips. There you are. That documentation is really important.
Exactly.
So if we document that work wasn't done up to standards or wasn't done, that is really important. If there's ever a challenge of, oh, you said you did this and you didn't, and we'd have it documented basically.
Right.
It's possible that's already happening, maybe informally or on a separate system.
There's already a process, but you may not see this in whatever you're looking at, but we don't oppose having an automation process for it.
Yeah.
What we oppose is that we manually send out emails to people.
Gotcha.
Because we don't have the bandwidth to do that throughout the life of the contract or at the end. So we urge the user departments to please track your contracts, track your vendor performance because you're engaging with them every day. And, you know, we want the positive and the negative because we use that in evaluation.
Yeah, and I mean, I think that would help us out as well, you know, because sometimes when we get change orders or contract extensions, you know, it depends on the contract, right? Like, you know, someone might say, well, how's it going? Or, you know, why are we renewing this contract? Or, you know, exercising an option to renew, well, because they got good scores, right? And I think sometimes the answer has been more anecdotal. Yep, we think they're doing a good job. We'll keep it going. But maybe having that documentation would be helpful, you know, for the whole procurement process in general.
Anything to make it easier on the customers. So
Okay.
we kind of thought through that as we responded to the different things. We don't want to add to already heavy processes. The goal is to reduce some of these levels. But we don't want to make it so cumbersome that no one wants to participate in anything.
Okay. Does it make sense for there to be sort of for a contract amount threshold? So some of the smaller contracts that maybe, you know, are just simply, you know, they're like, we're just like buying some goods or something. But it's more like performance of an HVAC repair or a road paving contract. Like that's what we're trying to evaluate, right? Like actual services.
We're evaluating everything. So some user departments have been, you know, ramping up their submission of how great their vendor has been. We've been seeing 9s and 8s, and then we've been receiving 3s. So
Okay. But you have to manually send them those forms?
the user department, we have it posted on our PNC website.
Okay.
Actually, no, the DeKalb PNC website.
Okay.
So the user departments can access that on their own and submit that to a particular inbox, and then it's just tracked, manually tracked, but it's tracked nonetheless.
Gotcha, okay. Zach, is it possible, and I see our IT director back there, is it possible that IT could just look at that particular recommendation? Because it says not started, but it sounds like that would be helpful
Yes.
to everyone that has to do that. And if it means saving some time and making it a little more automated, maybe that would help the departments. But maybe we could, if it's possible, could we, between now and when Ms. Cisse comes back, maybe that could potentially go from not started to complete?
We'll work on it.
Okay, great. All right. Okay, all right. That exhausts my questions. Any other questions, comments? Okay. But did y'all like the idea of starting a budget? I think we all agree the budget process earlier. And
Yes.
potentially either.
I've definitely been saying that. So
Yeah,
yes.
but
years,
let's look at
yes.
let's look at the way Atlanta does it as the example, because it looks like they're passing an actual resolution on budget priorities, which maybe that could be one way that we can sort of just, you know, jumpstart that process. So, okay, we'll research that a little more. Okay, great. Anything else, Ms. Cisse?
That's all for now. I'll see you all next quarter.
All right. See you
Oh,
next quarter.
actually, in the next committee, but
Well, yeah. some of
you
us-
all next quarter. Thank you.
Thank you very much. All right, very good. Okay, let's go back up to the status updates. We have financial statements. Director Diane McNabb. All right, we're getting back into the financial statement swing. Haven't done these in a while.
Yes.
We're excited.
And what I've got today, you know, I told you that we weren't scheduled to fully close until April 1st, but I was
Yep.
going to try to bring you something today. And what I've got today is the enterprise operating statements. And so I wanted to review those with you. The next time around, I'll bring the governmental funds.
Okay.
Now, the first one you see is watershed management. And I've highlighted a couple of things I thought you might be particularly interested in. The revenues are currently under budget, but we haven't finished all the revenue accruals. I can't say yet whether the accrual will be as high as getting it up to budget, but I do want to point out that the revenue is higher than it was last year already without any accruals. The comparison to the prior year would be the final of the prior year. So to the extent that we have accruals, that's going to make it that much better than the prior year. And then the other budgeted line item, you can see that the expenses are only 63% of budget in total. That's because of purchased and contract services, which you can see was under budget by $7 million. And that's a line item that's particularly difficult to budget with accuracy because it generally carries over from year to year. Our contracted services and the projects that they're working on, we don't generally know exactly how fast it's going to go, and so the amount budgeted will cover the full project, and so and you'll see how that compares to sanitation, and then the other costs. In the budgetary line item, you see that's way under budget. That's because the budgetary line item includes what we want our reserves to be at the end of the year. So that one always comes in, well, we hope, less than what was budgeted.
Okay.
And you can see everything else is pretty much in line. Capital outlays was slightly over budget. Capital outlays occur in multiple funds in watershed. And so sometimes a little bit more may go in this fund versus another fund, but they still are not over budget in total. And that's what the departments are required to be, is within budget in total, not on individual line items. But when we're evaluating it and reviewing financials, we look at it on a line item basis, naturally.
Okay. All right, any questions on that?
And
Commissioner Johnson?
the debt services is a lot higher. What is attributing to that one?
We've got new
The new
debt that
bond.
is coming online
Okay. Got it. Thank you. Are you?
because of all the debt, the WIFIA debt and the GFA debt, and then the bonds that we've been issuing for the capital projects.
Got it.
So I would expect it's going to continue to go up.
Okay.
The next one is sanitation. And again, you can see that sanitation is slightly below budget and slightly below the prior year. But again, that has to do with accruals. We didn't have a rate increase or anything, so we really didn't expect a significant increase in the revenues. But I do expect it to at least hopefully it'll be above last year by the time we get done with our accruals. Then you can see that the line items, again, are the two that we highlight are purchase services and other costs. Purchase services, you can see theirs is much closer to what the original budget is. So they've been progressing within this past year more further on those projected services. It doesn't mean that the other department is behind by any means. It just means when they plan to do the work varies. And then on other costs, there's just, again, the difference that's very comparable from last year to this year. But again, the budgeted number appears real high because that's where our our reserve budget is.
Okay, any questions on that one? Yes, Commissioner.
So, thank you, Mr. Chair. For the other costs, I understand that there is reserve. So does that mean that we have budgeted a large amount of reserves for the sanitation fund?
Well,
Because that's a big difference.
it would mean that we were hoping to have a $3.5 million reserve
Okay. Understood.
to
Okay.
add to our reserves. Am I speaking right? Yeah. To add, I just wanted to verify that with TJ. That is what we budgeted to add to the reserves.
To add to the reserves. Okay. Thank you.
And as you can see that without the accruals, we lost $10 million in sanitation last year, which was expected. You can see that the budgeted loss was $6 million.
Okay, Commissioner Johnson,
I'm good. Thank
Commissioner
you.
Longspires.
Thank you very much. Nice to see you, as always.
Airport operating is
Oops,
next.
hold on.
Oh, I'm sorry.
That's okay, no problem. First of all, I might need stronger glasses, so I'm wondering if you could email this to me, please?
Sure.
And if I have any questions, may I follow up through email?
Absolutely.
Okay, great.
And
Second,
I'll try to get them printed a little bit bigger because it's bothering my eyes too.
I've been leaning in trying to see them, so I've missed part of your conversation trying to read through the numbers. Forgive me if you already addressed this, but the net position beginning, and you look at the percent actual to current budget of 229.61%. Could you explain that again?
Those percentages are irrelevant. They just
Oh,
appear there. The percentages that are relevant are the ones up next to the actual budgeted line items.
Okay, so the far right column, is that what you're saying?
No, the middle column, the third from the right, that column is the current year expenditures compared to the budget.
Okay, so the third from the right are all correct except for in the change in net position beginning, and net position ending. Is that right?
Yes, yes.
Okay, so I'll ignore at the bottom. Okay.
The percentages are correct. It's just that the percentages don't tell you anything. They're not intended to give you an indication of something one way or another.
The miscellaneous revenue, an increase of 642%. Again, apologies if you addressed that already.
No, I haven't. I can check into that for you.
That looks a little large. Yeah. I'm just curious.
Oh,
You
yeah.
see what I'm seeing?
Because they had only budgeted 20,000.
Right. Was that
Came
just
in
an
higher.
oversight?
Pardon me?
Was that just an oversight?
No, I don't think so. They
okay.
just it's just a revenue source that you can't necessarily predict and count on,
Understood.
Special pickups or something like that.
and so we try not to overestimate it.
Okay. All right. Well, in the interest of time, I'll just hold any other questions, but I will certainly be paying attention to that column. Thank
Oh,
you.
well, please feel free to reach out and ask me any questions about this. I
Well,
love financial statements.
Let's stay on this for one quick second.
Okay.
Because I think what you said was very important. The loss, the negative.
Yes.
So, can you explain the net position beginning? So that's negative 13 million. So that's for
That
previous year?
is sort of the same as fund balance a little bit.
Okay.
It's between a company's retained earnings and our fund balance. Sort of in old definitions, counting standards have been revised and changed a bit. But that's sort of the beginning fund balance and the ending fund balance, if you're accustomed, or beginning net assets
Okay.
and ending net assets.
And so, so how should we treat that negative? Are we trying to balance that negative at some point in the future, or do we just have to accept it as a loss?
Well, we need to recover it eventually. It's not something that we feel like we've got to recover immediately, because there's two big liability numbers that are on the balance sheet of the sanitation fund. They have a big unfunded pension liability.
Oh, I see.
Okay, so and then we have a big post-closure liability, post-closure cost liability. We're required to accrue, as we use the landfill, we're required to accrue what it's going to cost us in the future to close that section of the landfill that we've used this year.
Okay.
Okay, but we won't have to actually fund it, pay the cash out until some future year when it's actually closed.
Right, but Zach will be here.
Yeah. So,
He's like, nope.
so while we have a big deficit here,
Yeah.
much of that is attributable to the post-closure cost and the retirement cost. But the
Okay.
thing that's important to remember about that is that we do have to eventually fund that. So if we don't begin to catch up on these liabilities and begin to put the money aside, when we get to the point where the landfill's closed, we won't have another source of revenue to pay that liability.
Right, I understand. No, that's important. Are you able to, just in a separate document, break out the pension liability versus the closure liability?
Sure.
Because I think those are two different policy questions.
Yes, and that's
A lot of
in-
departments have these unfunded pension liabilities because the whole pension is not 100% funded. So that's just,
Correct.
we're acknowledging that, but we also hope the stock market does really well, and we have a bunch of new employees who are younger and healthier and live forever. So, it might balance out by 2080 or something, right? Maybe.
Maybe.
we're doing
The
better.
healthier they stay, the longer they stay in the system,
Okay.
too.
All right, touche. Okay, but I think understanding the closure cost, that's one that seems, because I thought we closed one of the cells 2 years
Right,
ago.
and we have to do certain things
Yeah.
when we close them, but it's not the full-blown cost, because we have
Yeah.
to monitor methane, I think, forever.
Yeah, okay.
And then once the whole landfill gets closed, that is, a lot of the closure cost will be used at that point, too. So we use it as we go, as we close individual cells.
Okay.
And then, then, of course, we've got the whole big landfill that at some point is
Okay.
going to be closed.
So, and Zach, maybe let me tag you in here for a minute. So when it comes to the unfunded liability, the unfunded portions, but then what are we trying to accomplish in this year's budget, which is the operating expenses? So ideally, we would be putting aside money for the pension and the closure, but what's the delta gap on just running the sanitation department just day to day this year?
So how short are we going to be? Is that the long and?
Yeah, because I think we built into the budget an expected rate increase.
We did. I mean,
So,
that's-
and is the goal there to make up for more of these negatives, or are we focusing mostly on just the actual day-to-day operations?
And to start, I believe, addressing some of the negatives, but it's going to take a number of years to get back into balance. So what
Right.
we'll be bringing forward is a multi-year rate increase.
Okay. Well, if it's possible, just break those out, what percentage we're trying
Sure,
to
we'll be able
sort
to
of
show
stock away
over
for
5 years how we will
over 5 years. Okay.
eat into some of these deficits.
Okay. And I assume you'll be presenting that at PWI.
Yes.
Okay, so, Mr. PWI Chair, we're just going over the sanitation, so just heads up, it's coming your way. Okay, any other questions, comments on the sanitation fund? Okay, great. All right, next one. Airport?
Okay. All of airport's revenue is miscellaneous revenue for us. And you can see that has declined over last year and is short of budget. Again, we will have some accruals that will bring that up. And then again, the same two line items. It's interesting how we're consistent from one fund to another. The purchase contract services, very comparable to the prior year, less than budget. I'm sure that's because they have ongoing projects that they may have hired professionals for that didn't get, that not as much of it got started last year as may be used this year.
Mm-hmm.
And then the other costs, again, very comparable from year to year. I'm not sure, a negative means that they've reversed something out from last year.
Mm-hmm.
And we do have still a few accruals on the expenditure side that we expect to see. So I imagine that negative will go away, even though it's a very small one. And that also had the other costs, our reserve for fund balance. And you can see that we had revenues in excess of expenses of $2.7 million. So our net assets increased from $18.2 million to $20.9 million.
But that's also because it's possible the purchase contract services hasn't fully been expended. So it might go down a
Well,
little bit. 'cause you
They
have
would,
an
see, the
11.
expenditures lapse at the end of the year, so
Yeah.
whatever they didn't do last year had to be rebudgeted this year.
Rebudgeted, okay.
Yes.
Gotcha, okay. But what I'm saying is, like, we ended with more in the fund balance, but we're also budgeted $2.2 million in contract services, but only show $811,000, so
Mm-hmm.
that might,
That might come into
Equal-
this year.
right, okay.
But I still think that, we try to not just, we don't carry over, well, I don't want to speak for TJ, but we don't generally carry over budget because something was left over in the prior year. That's not how governmental budgeting is supposed to work. It's supposed to lapse at the end of the year.
Yes, we know.
Okay,
Have you not seen the last December meeting?
yeah.
working
But
on
we
that.
don't give them what they were getting
Yeah.
for this year and what they didn't spend last year. They only get what they are going to be spending this year.
Right, except for commissioners. Right, Zach? And then, will airport landing fees be under miscellaneous revenue? You said that's the main,
Yes,
that's
because
basically everything under miscellaneous.
miscellaneous revenue is a group of accounts.
Okay,
So I think it would go in there as well.
okay.
And we can always show you what the breakdown of those that's available.
Yeah, why
and-
don't we just, if you don't mind, since that's a huge, that's most of the money, maybe just the next report, just do the
Okay,
subcategories, just to know.
that's fine.
that make sense?
And once we finish our dashboards, you'll be able to drill down to
Open
go
Gov
out there.
Dashboards?
Well, this is our CV360 dashboard that we're working on.
Okay.
And you'll be able to drill down, and you may be able to do it with OpenGov too. But you should be able to click on that number and see what the detail is.
Oh, interesting. Is that like open checkbook kind of thing?
Yeah, but a lot more complicated.
Okay.
Because, we have many, many funds. We have thousands of account numbers.
Okay, so you need a key.
So,
All right. Okay. Well, if you know, you know. All right, anything else on airport? Quick question, Commissioner Long-Spears?
Thank you very much. I know we're running out of time, so I'll be brief. Under expenses for the purchased and contracted services, it looks like about $110,000 down from last year. Any idea why?
I'm not sure what they did last year that we didn't do this year. Again, those projects generally go across year ends, and so one year may be up, the next year may be less, and the next year may be higher.
That would explain that. All right, thank you.
All right, land. Looks like stormwater is the last one.
Okay, now you see that revenue is up, but it's still slightly under budget. That's going to be some accruals. And those accruals will be less than the accruals that we see, for example, in the general fund. This is tax funded.
Stormwater fees.
And so that's, and this particular tax has a high collection rate. So I expect that accrual to send it back up. Then contracted and purchased services, again, went up slightly from year to year, but again, lower than what was expected.
Okay, and I think, were we budgeting an increase in the fund balance? Is that,
Yes,
am I reading that right?
and you see that it did.
It did.
If you go all the way down, our revenues exceeded expenditures by $60 million. And our beginning fund balance was 11.8 million, or net assets, and our ending net assets are 17.8 million.
Okay, but we were budgeting negative 10 million. So does that just mean projects just didn't
That was yeah,
execute, basically?
it was using up the rest of the funds in capital, I think.
Okay. Gotcha. Okay. Any questions, comments on stormwater management? Commissioner
And-
Long-Spears?
Again, I will be brief. The net position beginning this year, the year-to-date actuals, $11,792,000. The net position ending is $17,841,000, so roughly a $6 million difference. Last year, it went from 10.7 to 11.9, so about a $1.2 million difference. Do we know why?
The revenues were slightly higher. If you go up to the total revenue number,
Slightly, by 3.
yeah, by 3, and then if you go down to expenditures, they were only up by $1 million. But then the biggest difference is in other financing uses,
Oh, yeah, okay.
and I think that's probably was transferred for capital projects.
Okay, so from the year-to-date of 5.5 million there, this year is 1 point, we'll say 5 million. And you said that is due to a transfer of capital projects? I'll look into that one.
Let me double check that.
Okay, okay.
TJ, do you want to say something?
Go ahead.
Right. So, yes, Diane is correct that that is a transfer that's occurring. So it's not reflected here, but it is. Actually, we submitted that journal entry yesterday.
Oh, okay.
So it'll be a part of the adjustment period for 2025.
Oh, good, thank you.
All right.
I didn't realize that was coming through.
Did yesterday. Good timing. All right. Thank you so much. That concludes my questions. Yield back.
All right, seeing no other questions on this. All right, thank you, Director McNabb.
Okay.
And we'll plan on have you coming back for the others, I think
I can come.
is it May or June? We'll figure it out, but every quarter, right?
Yes, but I want to bring you governmental funds next.
Oh, okay,
You know-
okay, so we'll do that next meeting? Okay.
May I ask
All
a
right.
question, Mr.
Yes.
Fab Chair?
Yeah, go ahead.
And Diane, if you wouldn't mind staying there, is that how you're wanting to do it moving forward, or you just want to do it that way because we're just getting started with the quarterly reports
I
again?
think that what we had talked about was so at the end of the first quarter, which would be like March 31st, we'll present the 12/31. At the end of June, the second quarter, we'll present the March 31st financials. And so
That
we'll,
makes sense, of course. Did you had a chance to look at the org act where we talked about at the last FAB meeting, where it really does spell out the requirements for public access and when these should occur?
and I'm sorry, I haven't had a chance.
Okay, all right, you might want to take a
Delve
look
into
at
that.
it. Yeah.
I
And
will.
Committee members, y'all might want to look at it as well as a refresher.
Yeah.
All right, thank you. Yield back.
Yeah, and if it's, I mean, since I asked the law department to look at that budget date change, I'm presuming that changing how things are posted shouldn't be a referendum also, but maybe just add that to the question for org act changes.
I double-checked the memorandum that we sent in December on the org act, and we addressed the question of the date change. We do not believe that that is a powers question.
Okay.
If that's the only thing that you're changing, the date, there are a number of other changes recommended in the budget section, but simply changing the date would not affect the powers.
Okay, and then in terms of this other one about just how the financials are presented in terms of like posting on the bulletin board, did we look at that on your memo?
About
Probably not.
using
Like a digital bulletin board?
Yeah, I'll double-check. I mean, that,
It seemed like a small change that maybe shouldn't be too much.
we'll double-check that piece.
Okay, all right, just wanted to, we'll just clear that up, because I don't know where the county bulletin board is.
And get the dates fixed. Yeah.
Okay, yes, the dates, exactly. Okay, all right, let's actually jump over to item 0504, which is the resolution authorizing the issuance and sale of tax anticipation notes for 2026 due December 15th, 2026, in the aggregate permissible amount of blank to blank, name of winning bidder, for the purchase of obtaining a temporary loan to pay current expenses during the 2026 calendar year. And I see Elise.
Yes, we have our financial advisor from PFM here.
Yes, welcome
Elise
back.
Lomel, and she's going to go over the presentation with you.
Okay, great. If you can make it a little quicker than you.
I will make it very quick. Yes, good afternoon. Is it up on the thing?
Might be soon.
He's getting it up.
Okay. Well, hi, Elise Lomel. I'm with PFM Financial Advisors. We serve as financial advisor to the county. It's been a few months since I've seen y'all, so hi. Here today to present on y'all's annual tax anticipation notes that you issue every year. Just a quick background on what is a TAN. It's a short-term tax-exempt borrowing that's issued by local governments to help them kind of wage the gap in between the receipt of tax revenues and expenditures. There are Georgia law restrictions and federal law restrictions on how much you can borrow, and it is due by the end of this year. If you have any questions on those restrictions, let me know. For the sake of moving quickly, we'll not go through those. But why does DeKalb specifically need a TAN? As you know, the bulk of your operating revenues come from property taxes and are received one time a year through September through November. But you obviously have expenditures every single year. So as you can see in this graph, expenditures exceed revenues in almost every month except for those months where you are getting those tax receipts. So those tax receipts have to last you from September all the way through the next through the next August before you start receiving those next set of revenues. So this causes depletion in the county's cash balance over the years, so it causes the need to borrow kind of that short-term debt to get you through those few months where you're having those negative cash balances. Based on the 2026 cash flows that we have seen thus far, the maximum deficit that we are looking at is about near 150 million. And that's based on those federal requirements on the previous page. This is just a quick overview of when we're going to come to you, the timeline for the TANs. So just given kind of how the CAL and FAB and full board meetings line up, you may see some overlap in documents. Today you're kind of reviewing the preliminary resolution, which will allow us to go out and take bids on the TANs, and then that will be approved at the full board meeting on April 14th. And then we will come back to you on April 28th with the result of those bids and recommend a winning bidder, the interest rate, and everything at that point. So you will have two approvals here. It will be the April 14th. That's the initial kind of resolution, and then the final approval of the final rate and bidder on April 28th, and then we'll close shortly after.
Okay, so we're not doing the thing we did last time on the other bond. This is going to be a week delay or a 4-day delay. I think the last bond we did, the water bond, we had to do it that morning.
That's because we're doing a competitive private placement. We do a competitive
Yes.
sale, but we don't get ratings. We don't use a prospectus document or an official statement. And so the banks that we receive bids from are willing to hold their bid firm for several days, which gives us, gives y'all and us a little more breathing room.
Okay.
So I think the way we have it, and I think April 24th is a Friday, but do not quote me on that. But I think we have bids coming due Friday, and then we'll come to you Tuesday with final, and we'll work through the documents and work through everything over the course of Friday afternoon and Monday. But again, with a public sale, we do have to have the sale that morning and then come to y'all immediately after, so that's a much quicker turnaround, and that is why that's the difference here.
Okay. All right.
Okay. And then here is just kind of where y'all have been over the past 23, almost 24 years, issuing TANs for the majority of them. The two things I kind of want to highlight here is both the change in the borrowing amount and also the change in the coupon or interest rates. Those interest rates are going to fluctuate as the market rates fluctuate. They're fluctuating a lot today, so let's hopefully they calm down in the next couple weeks. But that's also the benefit of going to banks. It's a little more stable than being out in the public market. So I just want to kind of highlight the fluctuation in rates there. We have gone down in rates since last year, but again, it's very volatile today, so that could change in the course of the next month. The other thing I wanted to highlight here is how the borrowing amount has changed. So in 2012, we are at 157 million, down to about 115 million if you're looking at the 2025 A's from last year. So that borrowing amount is going to change as your reserves change. As you build up reserves, that borrowing amount is going to go down. So you'll see in 2018, you only had to borrow about 44 million, and then there were 2 years where you did not have to borrow any. But once we draw on those reserves, that borrowing amount goes back because you kind of have less money to fund that gap in between expenses and receipts.
Okay.
And so
what
that
is
is really all I had for y'all today. I flew through that for the sake of
Great.
time, but happy to answer any questions.
Yes. What is the anticipated TAN loan this year?
150 million.
150 million?
As the budget increases, the amount of the TANs increases as well. And then as our reserves, as our budget increases, but our reserves don't, then that budget has to cover, the increase in the budget has to go directly into the TAN amount.
The
So-
general fund budget, not
All governmental funds.
all government funds. But we're not including the housing budget cost, right? Because that wouldn't
in
be a
there.
TAN. Because that'd be a separate debt service, wouldn't it?
Not the operating costs. Capital costs would be a separate bond issue.
So if we were building housing, that would be a capital
Or
expenditure, and that would
purchasing
be a
housing.
yes.
But the operations of the programs, whatever those programs are, whether it's rental assistance, down payment assistance, those are expenditures that have to come out of the current budget. And
okay.
TJ, you may be able to
Yeah, I just thought that
talk
part of the
about what we
housing
did,
bond was
where
to.
the housing budget is this year.
Yeah, I thought the part of the housing bond was to gain access to money through that bond
Just for
offering.
the capital projects. We can't borrow for the operating expenses.
Well, but do we know, so what are the operating expenses? I mean, it seems like it would take a while to get those programs up and running, wouldn't it?
So the way that we structured it this year, there's $12 million that was approved in the budget with the intent that there will be a bond issuance at some point, and that would cover the debt service. But we don't think that, based on the timing of when the budget was approved and when the debt is going to be issued, that we will really be using the bond funding this year. So
We won't have any debt service due this year, likely.
And so that's going to allow for some of that funding that's in this year's budget to be used directly for programs and other operating costs.
I see. Okay. So you do need the money through the TAN.
Potentially, yes. It's part of the budget, and it's not necessarily just for the bond issuance.
Okay. So basically, the amount is so much larger because the budget is a lot larger this year. Okay.
And we didn't increase our reserves any, right?
We did somewhat, but I mean, it's a number of factors. I mean, it's the size of the budget, it's where the reserves are, so.
All right, 'cause that's a lot larger than that's a lot larger than the last several years. So I'm just trying to make sure we're not like over borrowing if we don't need to.
We have very strict internal revenue code that we have to follow in projecting our cash flows.
Oh, so you're just basing it on a formula.
So that first slide that I flew through and did not touch on,
Okay.
it gives you the Georgia tax restrictions, which are much more lenient, but the federal tax restrictions really, they kind of define what is a cumulative cash deficit, and then they also give you a little bit of wiggle room there with that working capital reserve of 5%, just because you obviously don't really know what the expenses are going to be throughout the end of the year, so they do give you a little bit of a buffer there, but it's a very detailed calculation. Bond counsel reviews it very thoroughly.
All right, well, that's why we hire you, to run those numbers. Any questions, comments from the commissioners? Okay, all right, so we'll just, hopefully this will be approved at the April 14th meeting, and then y'all will go to work, and then you'll come back
On April 28th.
April 28th.
Yes.
Okay. Which is a BOC meeting. All right, you got your dates right.
Thank you.
So do we need to approve this out of committee today, though?
Yes, I believe so, right? Zach, we need to approve this. Yeah, so we'll look for a motion to,
Motion to, move to approve.
Second.
Mr. Chair,
yes, any
just one quick
any questions,
question.
comments?
Thank you, Mr. Chair. This question, I guess, is for Diane or TJ. So if we're looking at a $150 million TAN, what would we need to have in reserves going forward where we wouldn't have to have a TAN such as this?
150 million plus what we've got now. We'd have to increase it by 150 million. But there are governments who have, Gwinnett doesn't issue TANs, for example.
That's ultimately my point is how many months reserve operations would we have to be able to cover the $150 million?
I would say at least 6 months.
At least 6 months, okay. And currently, our policy says 1 month, and we're
I think
about 2 months right now?
We try to get up to 2.
Up to 2, okay. All right, thank you. Thank you, Mr. Chair.
Yeah, great questions. I think the CEO is pledged for a 4-month reserve by the end of the first term. So 2 more months to go after that.
That will allow us to reduce the amount that we borrow.
It will reduce, that's a good point, too.
And save the interest and the issuance costs.
There you go. All right, I'd like to hear that. All right, we'll have to get to these other items next time, committee members.
We need to vote on that one, though, Mr. Chair.
Oh, I'm sorry, yes.
We had a
All in
motion.
favor, raise your hand, say aye.
Aye.
Chair votes aye, motion carries. All right, okay, so we'll get to the CIP update next meeting, and we'll pick up the other 2 items. At this time, I'll entertain a motion for adjournment.
Motion to adjourn.
Second.
All in favor?
Aye.
Meeting adjourned.